Okay, dear students, Assalamu alaikum and welcome to everyone for session December 2025, our very first SBR live revision class. Actually, this class is extremely important. Why it is extremely important, let me tell you. Basically, in this class and from this class onwards, you will be actually learning how to do the drafting in SBR. Actually, after the introduction of IFRS 18, now the drafting is totally changed in SBR as well as in FR. If you don't know how to draft, then you will be losing good around 7 to 8 marks. And if you know how IFRS 18 has impacted the financial statements, and while drafting how I'll be using IFRS 18, then very easily you will be getting 7 to 8 marks. So I'll explain that. If someone does not have any knowledge regarding the drafting after IFRS 18, then good 7 to 8 marks, they are gone. Okay. Obviously, we'll be studying IFRS 18 in a really good amount of detail, as well as we'll be studying IFRS S1, S2 also in very detail, because that's a new area of SBR. Actually, after the introduction of IFRS 18, now whenever we are going to prepare financial statements, especially income statement, SOCI, there will be 5 categories. Why I'm giving the reference, I'll tell you while we'll be discussing IAS 16. So there are 5 categories in your SOCI, Statement of Comprehensive Income. I'll show you each and every category, don't worry at all. One is operating category. Then we have got investing category, financing category, income taxes, and profit or loss from discontinued operations. If you ask me, 3 are very important: operating, investing, and financing. Taxes, obviously, income taxes, we know that. And if IFRS 5 is applicable, then we'll be talking about the discontinued operations. Now, why the knowledge of operating, investing, and financing category is extremely important? Let me tell you, and how drafting has changed. You will see this in during IAS 16 as well. For example, my company, and let's say I'm a student, I've calculated the depreciation. I know that I'm going to charge that depreciation to the income statement. Now, listen to me carefully. If you are writing that depreciation expense 10,000, 20, whatever it is, it will be charged to income statement. Okay. Previously, when IFRS 18 was not there, and at that time, whoever used to write that depreciation expense will be charged to the income statement, perfectly all right, no issue at all. But after IFRS 18, actually, you have to exactly tell us to which category that depreciation expense will hit. Like depreciation will go to the operating category. You have to mention that. If you're not mentioning, you will be losing marks. Another example, I'll show you each and everything. Just wait. Another example could be, for example, I have sold a property, plant and equipment. Okay. And there's a gain and there could be a loss on disposal. So previously we used to write, okay, this gain or loss on the disposal of property, plant and equipment will go to P&L. Perfectly fine. The way back when IFRS 18 was not there. Now, if you are writing that gain or loss on disposal of property, plant and equipment will go to income statement. So this is incomplete drafting, incomplete knowledge. You have to tell us which category. Here again, the category is going to be operating category. So I've just given you an idea that due to IFRS 18, whenever any transaction, either debit of the transaction or the credit of the transaction, affects income statement, statement of comprehensive income, you have to exactly tell your examiner to which category it is going to hit, either operating, investing, financing. These 3 categories are very important. The 4th one is income taxes. We know that current tax, deferred tax, that goes to income tax category. And the last one is discontinued operation. If IFRS 5 is applicable, then we'll be talking about discontinued operation. Otherwise, there will be no discussion on discontinued operations. Within today's class, I'll show you what exactly comes in operating category, what exactly comes in investing category, what exactly comes in financing category. But let me repeat again, any transaction in the entire SBR, in any past paper, which affects income statement. Now, just writing that it will affect income statement, it is not enough. Your drafting is incomplete. You will be losing marks. You have to exactly mention the category under that income statement. I hope I have made this point very clear to everyone. Now you just need to you have to wait that what comes in operating category, what comes in investing category, what comes in financing category. Inshallah, in today's class, we'll be discussing each and everything. First of all, let us quickly do the revision of IAS 16 property, plant and equipment. We will not be revising IAS 36 today. Why? Because I'll be putting more emphasis on IFRS 18 right now. IAS 16 property, plant and equipment. First of all, when we say property, plant and equipment, so according to IAS 16, property, plant and equipment are tangible non-current asset held for use in the production or supply of goods or services for rental to others or for administrative purposes. So when we say property, plant and equipment, one possibility you are using in the production, for example, your plants, assembly plants, supply of goods, you have got lorries using for supply of goods, you are providing services. Of course, nowadays we cannot provide services without property, plant and equipment. Of course, right now I'm teaching, I'm providing services. Obviously, I'm using property, plant and equipment. I'm using my laptop. Otherwise, without the laptop, without the technology, I won't be able to provide the services. Now, for rental to others, I always put little emphasis on here. Now, what do you mean by rentals to others? Because there's one more IAS, and that is IAS 40, investment property. Under investment property, we also talk about rental income. The biggest difference when IAS 16 is applicable and when IAS 40 is applicable. Now listen, under IAS 16, when I'm providing properties on rent, then I'm just not providing properties on rent. We do provide the significant ancillary services. The best example is hotel properties. In hotel properties, we just do not provide that room on rent. We do provide significant ancillary services. So on hotel properties, I'll apply IAS 16, property, plant and equipment, even though I'm getting a rental income. But when it comes to a building, a bungalow, which I've just given on rent, I'm not providing the services like we provide in case of hotels. So it means on that buildings, on that bungalow, I will apply IAS 40. So whenever we are generating rental income from simply hotel properties, then I'll apply IAS 16 because we are providing significant services. Another example, if your company has given, or let's say your company has a policy to provide properties, to give properties only to their employees on rent. Company is having a policy to give properties on rent to only their employees. On those properties, I'll apply IAS 16. I'm not going to apply IAS 40. Because it is quite obvious that you are actually using those properties in the business. Because those properties are not available to everyone. They're just available to your employees. Either you are charging exactly the market rent or less than that, that is not an issue. The main point is those properties are only available to the employee of your company. That's it. I'll apply IAS 16. Okay, are expected to be used for during more than one period. So simply, the useful life is more than 1 year. Okay. Initial recognition. An item of property, plant and equipment should be recognized as an asset when it is probable, means more than 50% chances that asset future economic benefit will flow to the entity. Cost of the asset can be measured reliably, easy part. Now this one is important. ISB conceptual framework. Actually, according to the conceptual framework, the elements are recognized if recognition results in relevant information. If you are recognizing element means asset, liabilities, income, expense, equity. If you are recognizing the element, you should be recognizing when they are providing what? Relevant information. A faithful representation of asset or liability resulting income, expense, or equity movement. The recognition criteria in IAS 16 and most other IFRS accounting standards differ from the above because standard were based previous version of the conceptual framework. Here you need to just know one thing. If the recognition criteria is different in IAS or IFRS and it is different in any conceptual framework, then we always follow IAS or IFRS. If there is a difference between what IAS says and conceptual framework says, you will always follow to the IAS and IFRS. The conceptual framework does not override the requirement of individual IFRS accounting standards. The recognition of property, plant, and equipment is therefore determined by reference to the criteria of IAS 16. Now, property, plant, and equipment should initially be measured at cost. Now, this is again very important. While drafting an SBR, you should know that under each as IAS or IFRS, initially assets or liabilities they are recognized either at cost or fair value. You have to mention that while drafting. Now, I'm writing an answer in SBR and I'm saying that initially property, plant, and equipment they are measured at fair value. So then you're making a mistake. You have to write initially at cost. Then subsequently, of course, depends on the company's accounting model. Property, plant, and equipment should initially be measured at cost. According to IAS 16, the cost comprise the purchase price, costs that are directly attributable to bringing the asset to the location and conditions necessary to operate, the estimated cost of dismantling. We know that if there is any decommissioning cost, number one, we have to calculate present value of that decommissioning cost. And the double entry of present value of that decommissioning cost will be property, plant, and equipment debit, provision credit. Repeat. Property, plant, and equipment debit. And I'm going to credit what? Provision. Okay. IAS 16 says the following costs should never be capitalized. Of course, general overheads you will not capitalize. Abnormal losses you will not capitalize. Costs incurred after asset is physically ready for use, you will not capitalize. Costs incurred on initial operating period, such as initial operating losses. Any further costs incurred before a machine is used in full capacity. So simply initial operating period. That is your initially, of course, when you'll be using machine. So initially there will be operating losses, but you cannot capitalize that. Cost of opening a new facility, you cannot capitalize. Cost of relocating and reorganization entities operations, you cannot capitalize. Now, this is important. And within this, I don't know either the diagram which the box which I made, does it look like rectangle or not? Leave that. Within this, there's a flavor of IFRS 18. Where is that flavor? I'll tell you. As a result of testing, recently purchased or constructed property, plant, and equipment products samples might be produced that are sold. IAS 16 has been amended to require proceed from such sales as well as associated costs to be recognized in, look at this, operating section of the statement of P&L. Profit or loss. Now stop. When IFRS 18 was not there, we used to say only one thing, to be recognized in the statement of profit and loss. Now if you are writing in SBR that this will be recognized in P&L, this is, you will be losing marks. You can see that. As a result of testing, recently purchased constructed property, plant, and equipment products, samples might be produced that are sold. IAS 16 has been amended to require proceed from such sales as well as associated costs to be recognized in the operating section. This reference is because of IFRS 18. So it looks very simple, but if you are not mentioning this, you are losing marks. And I've already mentioned, if from here onwards, while you are answering SBR, any transaction, debit or credit, which affects P&L, you have to mention the section as well. Operating section of the statement of P&L. Previously, IAS 16 required these proceeds to be deducted from the carrying amount. Now it will go to the operating section of income statement. Measurement model. Initially, property, plant and equipment is measured at cost. Subsequently, actually, IAS 16 gives you the choice. Now, student, always remember one point. Wherever the term choice comes, it means accounting policy. Now listen. Whenever, if someone is asking a question from you, what do you mean by accounting policy? Accounting policy means where I have a right to choose. Where I have a right to choose one out of, obviously, options. Initially, property, plant and equipment is measured at cost, but subsequently you have got two choices. Either you can follow the cost model or you can go for the revaluation model. So how many models are subsequently given by IAS 16? Two. One is cost model, another is revaluation model. Now listen very carefully. Actually, either the company follows cost model or you follow the revaluation model. Of course, it's going to be your accounting policy. It depends on the organization. But now listen, according to the conceptual framework, you actually prepare of financial statements. They should prepare financial statements in such a way to provide the relevant information, to give faithful, to show the faithful representation of elements of asset, liabilities, income, expense, equity. Now listen carefully. In conceptual framework, we also have two terms. One is historical cost, another is current value, such as fair value. Now listen. There's a possibility that you have got a property, plant and equipment. Let's say you have got a machinery, which company is using in the production. Normally, the machinery which we are using in the production, normally I'm not going to sell it. I will use that machine to the whatever the expected useful life of that machine is. I'll be using till the last day of that machine's useful life. Normally it happens. We are not going to sell our assembly plants. It means if I've got machinery which I'm using in the production, so normally I don't have any intention to sell it. Normally it is the value will not change so much due to the market factors. If I'm keeping that machinery at cost model, so I'm providing more relevant information to the user of financial statements. Why? Because we don't have any intention to sell it, and which is quite obvious. But on the other end, the building of that company, that factory, the building. Actually, when it comes to the building, so the value of the building due to number of factors in the market, the value of the building keeps changing. And obviously the building which you bought, where your company has bought 10 years ago, today the value of that building will not be same. It will be different. Now it looks more, I would say, relevant if the preparer of financial statements, they keep that building at fair value, at revaluation model. But again, this is just, framework is just guiding you, that try to give relevant information to the user of financial statements. But at the end of the day, organization will decide either subsequently, let's go stick with the cost model to go for the revaluation model. ISB framework, just they have given you a hint, like some items of property, plant and equipment such as land and building are highly sensitive to market factors over time, particularly when prices rise. The fair value of land and building may materially differ from the purchase price. As such, it may be that measurement based on current value provides more relevant information about the financial position of reporting entity. But at the end of the day, what conceptual framework says, such decisions are judgmental. Preparers must ensure that qualitative characteristics of useful information are maximized as far as it is possible. Now, cost model, if my company is following the cost model, simply property, plant and equipment which are held at cost, less accumulated appreciation. In case of impairment, I will deduct the impairment as well. In case of revaluation model, less any subsequent accumulated appreciation after revaluation. Whatever depreciation you have calculated, deduct that. And if there is any impairment loss after revaluation, deduct that as well. So how do we calculate carrying amount in case of revaluation model? Fair value less any subsequent accumulated depreciation. Simply, in case of revaluation model, the carrying amount is equal to the fair value minus the depreciation which my company has calculated after revaluation, less the impairment loss which we have allocated to that property, plant and equipment after revaluation. Now, here few concepts are very important regarding revaluation. Revaluation model is adopted, then IAS 16 provide the following. Now, always listen one thing, students. Listen it nicely. In case of revaluation model, it is not necessary. It is not necessary to revalue your property, plant and equipment every year. If you want to do that, go ahead. But if somebody is saying it is the requirement of IAS 16, the answer is no, it is not the requirement of IAS 16. IAS 16 does not ask you to revalue your property, plant and equipment every year. So revaluation model means if you want, you can revalue after every 1 year. If you want, even you can revalue after every 3 years. If you want, even you can revalue after every 5 years. But you need to make sure one thing, the point number one. Revaluation must be made with sufficient regularity. They're not saying annually, to ensure that carrying amount does not differ materially from the fair value at each reporting date. So, for example, if you are revaluing after every 3 years, so make sure that the carrying amount which is in your books, it should not be materially different from the fair value. But main concept is under revaluation model, to revalue the property every year, it is not necessary. If an item is revalued, then entire class of assets to which the item belongs must be revalued. Now, this is also very important. If your company has decided, okay, let's revalue, okay, then what IAS says, then you have to revalue the entire class of asset to which the item belongs must be revalued. Just an example, okay? In case of office equipment, just an example. Now, if you say I'll just revalue the computers, actually, you can't do that. You have to revalue other office furnishings as well. In vehicles, so if you have decided to revalue the cars, then you should be revaluing other, I would say, fleets as well, like vans, trucks, if you have. Why? If an item is revalued, then entire class of assets to which the item belongs must be revalued. If the revaluation increases the value of an asset, the increase is simply property, plant and equipment is debit, revaluation surplus which goes to OCI, other comprehensive income, will be credited, and other comprehensive income held in a revaluation surplus within the other component of equity. Let me tell you one thing. The double entry is, in case of revaluation, property, plant and equipment debit, revaluation that goes to OCI will be credited. Now, under OCI, other comprehensive income, I will show this revaluation as an item which will not be recycled to P&L. Means, if subsequently I'm going to sell this property, plant and equipment, then the revaluation will be close to the retained earning. This revaluation will not be recycled to the P&L. So, In case of SOCI, revaluation surplus we will show under OCI, other comprehensive income. In case of SOFP, this revaluation surplus we will show under OC, other component of equity. OCE, other component of equity. Come here. If a revaluation increases value of an asset, the increase is presented as other comprehensive income and disclosed as an item that will not be recycled to P&L in the subsequent periods and held in a revaluation surplus within other component of equity OCE. So OC in SOFP and in SOCI under OCI. If the revaluation decreases, the value of the asset decreases should be recognized immediately in the P&L. Look at this, students. Again, IFRS 18. Operating section, unless there is a revaluation surplus already in existence on the same asset. For example, I have a property, plant and equipment. Carrying amount is 100 million, including 20 million revaluation. Assuming examiner says recoverable amount is 70 million. So obviously I have to bring my carrying amount from 100 to 70. Now what will be the double entry? Now this is very important. First of all, I have to eliminate the revaluation surplus, which is 20. But property, plant and equipment I will credit by, it will be credited by 30. Now, impairment. I'll say this is my impairment, but this impairment I will show where? Under operating section. Operating expense, which is, I will show this under operating section. Now, what comes in operating section, you will see in a while. Now, just writing impairment will not help me. I have to mention in SBR that this will go to operating section. And if there is obviously no revaluation already, there's no revaluation, then entire 30 will go to operating section. Now, depreciation. If your asset is having a useful life, then obviously over the useful life, asset will be depreciated. Residual value is an estimate of net selling proceed received if the asset was at the end of useful life was disposed of today. Simply, residual value is your net sales value of the asset. If, for example, assuming that asset reaches to its useful life, then what will be the selling price? Depreciation, student, look at this. Depreciation is charged to operating section. Again, IFRS 18 of the statement of P&L, unless it includes in the carrying amount of another asset. For example, I'm using property, plant and equipment to construct a building. Student, if I'm using property, plant and equipment to construct a building, now I will not expense out the depreciation of property, plant and equipment. Slowly and gradually that property, plant and equipment depreciation will become part of that building. Otherwise, what it says, depreciation is charged to operating section of the statement of P&L. Student, I strongly believe now everyone knows that now in SBR, while answering, if you are just writing depreciation is charged to the statement of P&L, you will not get marks. You have to specifically mention the section, and I've said three categories are very important. I will be sharing all the details in today's class, don't worry at all. What comes in operating category, what comes in investing, what comes in financing. These three categories are extremely important. Depreciation begins when asset is available for use and continues until the asset is derecognized, even if it is idle. Even you are not using the asset, still you have to depreciate. So depreciation begins when your asset is available for use. Now listen to me carefully. Your company has bought a property, plant and equipment which is available for use. Let's say this property, plant and this equipment is available for use since 1/1/2025. But there's one problem. The problem is the workforce required for using this property, plant and equipment is we have to give them a training. Before the training, they cannot use it. And the workforce will be ready after 6 months. Even though workforce will be ready after 6 months, but you have to depreciate the day property, plant and equipment was available for use. So for example, you have utilized the property, plant and equipment for 2 years, 3 years, and then 1 year you did not use it. Even the plant is idle, you have to depreciate. Depreciation must be allocated on a systematic basis. Now, this is very, very important. Actually, systematic basis means the depreciation method should reflect the pattern of economic benefit which you are expecting to get from the asset. For example, if your company says that initially we will be getting more benefit from the asset and later on we will get the less benefit, reduced benefit, then go for reducing balance method. Because in reducing balance method, what happens? Initially there will be more depreciation and slowly and gradually depreciation reduces. So it matches with the pattern of economic benefits. Repeat. If your company believes that initially we'll be getting more benefit because the asset is new, later on asset will be old, we'll be getting the less benefit. Okay, just an example, let's for example a car. So normally a new car will give you more benefit initially, later on there will be lots of maintenance costs and so many other things. So simply later on reduce benefits. In case of property, plant and equipment, machinery, if the company says that initially we are getting more benefit, later on we'll get reduced benefit, then you will go for reducing balance method. But when I have a building, normally office building, admin offices, obviously IAS 16 is applicable. But the company says within that, from that building, we'll be getting more or less the same economic benefits. If you will be getting the same economic benefits, then you should be using a straight line method. And let me tell you one more thing. If the pattern of economic benefit changes after 2 years, after 3 years, if the pattern of economic benefit changes, then you have to change depreciation method. And change of depreciation method is change in estimate. And change in estimate applies prospectively. Change in estimate applies prospectively. Depreciation must be allocated on a systematic basis, reflecting the pattern in which the asset's future economic benefit are expected to be consumed. In practice, many entities depreciation property, plant and equipment on a straight line over its estimated useful life. Now, this is just an not acceptable way of depreciating the asset. Depreciation methods based on revenue generated by an entity are not appropriate. Simply, if you are generating more revenue, more depreciation, less revenue, less depreciation, no, does not make sense. This is because revenue reflects many factors such as inflation, sale prices, sales volume, rather than economic consumption of an asset. So if a company says, okay, we'll depreciate according to the revenue generation. If we generate more revenue, we'll depreciate more. If we generate less revenue, we'll depreciate less. This is not acceptable. According to this, if this becomes acceptable way of depreciating, then can I say when your property, plant equipment is idle, then it should not be then there will be zero depreciation. It is contradictory with IAS 16 because IAS 16 says when asset is available for use, you should start depreciating it. IAS 16 says even the asset is idle, you have to depreciate it. So this argument that depreciating the asset according to the revenue generation is not acceptable. The depreciation method, residual value and useful life of an asset should be reviewed annually and revised if necessary. Any adjustment are accounted for a change in Look at this accounting estimate. Depreciation method 1, residual value 2, useful life 3. 1, you have to review them annually. And if it is necessary to change, then you have to change it. And change any one of them is changes, the change is treated as change in estimate. Change in estimate is always applied prospectively. Okay. Componentization. Now, what is this componentization? Basically, you will see there are a number of assets. They are the combination of multiple components. And normally, each component will have a different useful life. Then, according to the concept of componentization, you should be depreciating each component separately. For example, some parts of an asset may require regular replacement. For example, the seats in an aircraft. Replacement parts should be capitalized and carrying amount of that part replaced. Old seat should be derecognized. If the carrying amount of the replaced part is not known, then the cost of the new part can be used to estimate the cost of the old part when it was originally acquired. For example, if you are replacing the old seat and putting the new seats, and assuming you don't know the value of the old seats, then you have to estimate. Okay, the new seat which I have bought it today, it is for $5,000, assuming having a useful life of, let's say, 5 years. I'll be depreciating it over 5 years, or maybe after, but after 3 years we will replace it. So you'll be then it means a very simple calculation. Then at the time of replacing this seat, the carrying amount will be 2,000. So something like that. If you don't know the replacement asset value, then you have to estimate. Some assets such as aircraft can only be operated if regular inspection for faults are carried out. The cost of these inspection can be capitalized. Any remaining carrying amount of relating to the previous inspection should be derecognized. For example, according to the Civil Aviation Authority, let's say your company's aircraft, they have to go for inspection after every 3 years. And that inspection will cost $6 million. But after every 3 years, of course, you will be capitalizing this $6 million and you will be depreciating it over 3 years. Here, we are not talking about a routine inspection, which every time you carry out after landing and before flying. Of course, that routine inspection you have to expense out. Here we are talking about the inspection. I've just given you the example. For example, the inspection which is required by Civil Aviation Authority, it depends on the country to country. It could be after every 3 years, could be after every 5 years. On that inspection, of course, a very significant amount company will have to bear, and that will be capitalized. Depreciation should be charged separately on each significant component part of an property, plant and equipment. Parts which have the same useful life can be grouped together. If company says 2 or 3 components, they are having same life, then you can depreciate them, combine and depreciate them as a group. Derecognition. Of course, if you have sold the property, plant and equipment, you have to derecognize. IAS 16 says assets should be derecognized when disposal occurs or if no further economic benefit are expected from the asset use or disposal. The gain or loss on derecognition of an asset is the difference between the net disposal proceed, if any, and carrying amount. And that actually goes to P&L. Student, which section? According to IFRS 18, can I say just writing that gain or loss goes to P&L is not acceptable? Which section of the P&L you will show the gain or loss? Can I say operating section? Okay. When a revalued asset is disposed of, any revaluation surplus may be transferred directly to retained earnings or it may be left in the revaluation surplus within other component of equity. Now, this is very important concept. At disposal, it is not compulsory, it is not necessary that you have to close the revaluation to the retained earning. If you want, you can do that, but it is not compulsory. Disclosures. You have to just read it once. Okay, now come here. Now look at this. Explain how the above item of property, plant and equipment would have been accounted for in all relevant reporting periods up to December X5. CAP bought a building on January X1. The purchase price was 2.9 million. Associated legal fee was 0.1 million. Can I say this 0.1 million will be capitalized? Number one, you will write in exam that initially property, plant and equipment is measured at cost. And cost of this building is actually 3 million. Okay. General administrative costs allocated to the purchase 0.2. Expense out. You cannot capitalize this. CAB also paid sales tax of 0.5 million, which was recovered. So obviously I cannot capitalize this. It is recovered. Tax authorities. The building was attributed a useful life of 50 years. It was revalued 4.6 million on December X4. Sold it for 5 million on December X5. Now listen. After how many years we have revalued? Can I say after 4 years? Because we bought it on January X1, so complete X1, X2, X3, X4. Now listen. Before revaluing the building, we have to first calculate the carrying amount of the building. I'm just giving you the idea. Carrying amount of the building. 3 million. Useful life is 50. We are actually revaluing this building after 4 years. So the remaining life is 46. This will directly give me the carrying amount at the time of revaluing the building. 3 multiplied by 46 divided by 50. I'm getting 2.76. Revalued amount is 4.6. So here comes the revaluation surplus. $4.6 minus 2.76, I'm getting 1.84. December X4, obviously property, plant and equipment debit by 1.84. Revaluation surplus, which I have to show in OCI. And in SOFP, I have to show under OC. And after revaluation, after revaluation, you need to depreciate the asset over the remaining life. After revaluation, we depreciate the asset over the remaining life. Okay. And every year depreciation is charged to the operating section. Initially, property, plant and equipment is measured at cost. Subsequently, two options are available here. They are going for the revaluation model. Depreciation expense is charged to the income statement and which section? Operating. Now we have sold this building for 5 million on December X5. It means again, before the disposal, we need to calculate carrying amount of this building. Building December X5. 4.6 depreciation. Remaining life was 46. It means at the time of disposal, the carrying amount is 4.5 and we are selling it, we have sold it for 5 million. Gain on disposal. Now listen, student. Gain on disposal 0.5 million. Of course, I will charge this to the P&L, but which category, which section? Operating section. So this gain on disposal is obviously goes to P&L under operating section. Okay. Now previous revaluation. Previous revaluation surplus, which was in December X4, OC, other component of equity, simply debit and retained earning credit. It will not be recycled to P&L. But let me tell you one thing, one more thing. It is not necessary that you have to close the revaluation to the retained earning. If you don't want to do that, it's okay. Okay. Cap purchase a machine on 1st January X3 for 1 lakh. Attributed useful life 10 years. On January X5, after how many years? 2 years. X3 and X4. Cap reduces the estimated remaining useful life to 4 years. Now listen. First of all, change of useful life is change in estimate, and change in estimate applies prospectively. X3, X4. Your depreciation is, can I say 10,000? And which section? It is charged to the income statement, and the section is operating. Now, 11X5. 11X5. Machine carrying amount becomes 80. One lakh minus 20. Now this 80,000 will be depreciated over the remaining life. Now the remaining life is 4 years. So it means depreciation in X5. It will be 20,000. Okay. Now first of all, I really want to show what IFRS 18 says, what comes in operating category, what comes in investing category, what comes in financing categories. Because other two categories are very important, very easy. One is income tax category and discontinued operation. We know that. And at least I have made one point very, very clear to everyone that from here onwards, when you will be, it's a very first class. Okay, I've just discussed the biggest change in SBR. Any double entry which affects the income statement, you have to mention the category as well. Now, just a minute. Let me share that. IFRS 18. Then I will share the answer of this question with you, don't worry, as well. I hope everyone can see this. IFRS 18. Of course, we have not studied IFRS 18. We will be studying it. I would say in a very next class, we'll be discussing this. Recording is also available, but I want to discuss this IFRS 18 in a live class, okay? I hope everyone can see this classification of income and expenses. As per IFRS 18, now listen student, there is no more IAS 1. Practically IAS 1 exists, but in ACCA, there's no more IAS 1. IFRS 18 has replaced IAS. IFRS 18 has replaced IAS 1. Practically implementing IFRS 18, the compulsory date is 1/1/2027. But ACCA has adopted this earlier than that. So practically IAS 1 does exist. Companies, they are following it. But in ACCA, we follow now IFRS 18. As per IFRS 18, income and expenses recognized in the statement of profit and loss must be classified into how many categories? 5. Operating, investing, financing, income tax, or discontinued operations. Look at this. In SBR exam, when explaining the financial reporting statement of a transaction, you will need to specify which section of the statement of P&L that transaction affects. Either it is affecting operating, investing, financing, income tax, or discontinued operation. Like we were just discussing right now, IAS 16, and many times we have given the reference that it will be charged to the income statement under operating section. Question. Just 1 minute. Look at this. This will give you more idea. I hope everyone can see. Look at the category operating. The question is what comes in operating category. This will make the life very easy. Anything not classified as investing or financing and the main business activity that comes in operating category. Look at this revenue. Which section of the P&L? Operating. Cost of sale operating. Depreciation, amortization, gain or loss on disposal of property, plant and equipment. Look at this. Current and past service cost, you people have not studied yet, but you will study IAS 19. So for example, now again, I'm just repeating it. If I'm saying depreciation expense charged to the income statement, I will not get marks. I have to say depreciation expense charged to the income statement operating section. I will get marks. If I'm saying gain or loss on disposal of property, plant and equipment goes to P&L, I will not get marks. If I'm saying gain or loss on disposal of property, plant and equipment goes to P&L under operating section, then I'll get marks. Yeah, I will share. Why not? Students, you will get each and everything. Don't worry at all. There's everything, all the PDF, everything is for my enrolled students. So you should not be worried. Look at this investing. What comes in the investing section? Investment in associate and joint ventures, cash and cash equivalent, return on asset that generate income independently from other resources, for example, financial asset, unconsolidated subsidiaries. Students, we will be discussing IFRS 19. That is also a new area in SBR. Don't worry at all. Now, investing, the interest income, investing activities, dividend income. On shares, I'm getting a dividend. You will show that in your under investing category. Rental income, income or expense from initial recognition of subsequent treatment of financial asset, for example. But this will, you will be studying this in a really good detail. Don't worry at all under IFRS 9. But look at this, what comes in investing category is here. Now what comes in financing category is a first class, but I just wanted to give you one idea that from here onwards in exam, if you're just writing this income state, this transaction will affect P&L, you will not get marks. You have to mention the section as well. Financing, liabilities from transaction that involve only raising finance, for example, financial liabilities. So interest on borrowing, you will charge that to the financing section. Interest on lease liability, financing section. Unwinding of provision, discount on provision, interest cost on pension liabilities, liabilities from transactions that do not involve the raising of finance, for example, pension provision leases. We were just revising IAS 16. There was one concept, decommissioning cost. The double entry of the decommissioning cost is present value of decommissioning cost. First, we calculate the present value of decommissioning cost. Double entry is property, plant and equipment debit, provision credit. Then after that, we do the unwinding of discount. Double entry of unwinding of discount is finance cost debit, provision credit. Now that finance cost you have to mention in your exam will charge to the P&L to which section? Financing section. Now student, I strongly believe that it should be very, very clear how we are going to draft in SBR and how IFRS 18 actually they have impacted the drafting in SBR. Of course, later on there will be more and more discussion on IFRS 18. Don't worry at all. It's a first class, but I wanted to set a, I would say, tone that from here onwards, how you will be thinking. If you ask me, I would say just these three, whatever you said, boxes will really help you. What comes in operating, investing and financing? Because income tax category is very easy, because we know that current tax, deferred tax, that goes to income tax category, and discontinued operation category is also very easy. If IFRS 5 is applicable, then obviously I'll be discussing the discontinued operation category. Otherwise, there's no need to discuss anything regarding discontinued operation category. Now, let me just quickly share the answer of that, test your understanding, which we have already discussed, and I'll show you the impact of IFRS 18 within that answer also. And I'm repeating it again. If you are ignoring, if whoever ignores in SBR while answering questions the importance of IFRS 18, you will be losing 7 to 8 good marks. I hope everyone can see the answer. Okay, the building would have been recognized at 3 million. Okay, with journal admin, you will have to expense out. Look at this. Journal Admin cost 0.2 million will have been expensed out to, again, IFRS 18. You can see that how it has again impacted. If you are just saying that expense out will not help you. Depreciation 0.06 comes every year, would have been charged to, look at this, students. This is what your examiner wants to see in your exams. If you're not writing like this, you're not doing the drafting like this, you will be losing marks. Prior to revaluation, we know that, okay, again, I just want to tell you, okay, look at this. Now, look this. December X5 profit on disposal 0.5 million would be recorded. Look at this. I strongly believe now it is very clear how this IFRS 18 is impacting the drafting. The revaluation gain previously recognized within OCI held within the equity are not reclassified to P&L on the disposal of asset. You can just do this. OC, other component of equity debit, retain earning credit. Again, this is not necessary. But if you want, you can close the revaluation to retain earning. I think we did discuss here. If you're changing the change of useful life is change in estimate, and change in estimate is applied prospectively. So I strongly believe a very first live revision class of SBR should be eyes opening for everyone. How IFRS 18 has impacted the drafting, and it's just the first class of revision. That is why it's not a long class. And students, you people should be mentally ready for long live revision classes. Class will be once in a week, but the duration will increase. I think today we took around 1 hour class, but coming week you should be mentally ready for 1.5 to 2 hours. And I would say do give the feedback on today's class in your relevant WhatsApp groups. That motivates, of course, the tutor and the management as well, that we are on the right direction. So students, see you all inshallah in the next class. And let me tell you, those students, they could not join on time, or they will be, due to office hours, they are joining late. So recording will be uploaded, and recording will be available on the same day. After just 3 to 4 hours, the recording will be available. And there will be they are going to make one proper section, and that will be live revision classes. And you have to just go to that folder which says live revision classes December 25. You will find all the live revision classes every Saturday. Live revision classes on every Saturday. Is that clear? Live revision class is on every Saturday. So timings, I will try to push the timings little bit around 2:30, so that office going persons, they can also manage. So 2:30 I think would be fine. So I'll ask the admin to make it 2:30 every Saturday. And of course, so within, it takes around 10 minutes normally students to come. So 2:30 is, I think, is good enough. Okay, students, thank you very much. And do give the feedback on today's class. I'm very excited. Let me tell you, I conduct my live revision classes with passion, with my motivation, and till last day, you will see the motivation will remain there, inshallah. And I'm conducting these live revision classes for all the papers. Thank you, students.